Here's your housing market briefing for March 2023. In this report, I provide a quick update on the housing market, share the latest data on home prices, and inform you about what trends to expect in the nearest future. Why should you care about the housing market? Because for most of you, your home is your most valuable economic asset. I'm sure you've heard this a lot, and again, for most of you, it's true. So you're smart to be watching this. It's important to keep up with the latest macroeconomic news to know how you and your family might be affected directly by the changes and sometimes wild swings in the housing market. Part of the reason I decided to publish these market reports is to counterbalance the hugely popular YouTube channels by self-proclaimed experts who promulgate sensational predictions about the housing market and the economy in general, based on who knows what, limited out-of-context data of dubious origin, or sometimes no data at all. They get millions of views, of course, but there is a real cost. Many people rely on these pseudo-market analyses, and that's wrong. Clickbaiting is wrong. Because behind every view, there's an actual person. And even though my own analyses and predictions aren't perfect, as no one can foresee the future, I refuse to clickbait. I analyze the data and I present what I find, whether it's sensational or dull, positive or negative. And my reports are based not on wild speculations, but on data from reliable sources. My goal is to provide you with useful and reliable information. As usual, I start with national macroeconomic indicators related to the housing market. First, what is happening with home prices around the country? The Case-Shiller Index shows a 6th consecutive decline in home prices since its peak in June 2022. Zillow, which hasn't shown any decline until this month, has finally caught up and updated its national index. It's now showing that prices have been coming down for the past 5 months. Redfin is sticking to its consistent message that home prices are down again, but year on year they're still higher. Home prices are declining in part because people are worried about the economy. The Conference Board's Index of Leading Economic Indicators says a recession is still coming. On the other hand, the Chicago Fed's National Activity Index is reporting an increase in economic activity in the latest reported month. This positive news is negative news for the Fed Chair Jerome Powell, who told the lawmakers on Tuesday that,
as I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time.
So this means that the interest rates will remain elevated for some time. The 30-year fixed is now at 6.73%, the highest it has been since November of last year. The higher interest rates aren't helping the mortgage applications numbers. According to the Mortgage Bankers Association, mortgage application trends were in the negative zone 3 times in the past 4 weeks. That's national news. Let's now zoom into the local level because the housing market is hyperlocal by nature. Again, as I've said before, while my data come from Palm Beach County, Florida, and while my indicator levels are only locally applicable, the indicator trends, meaning changes in the levels, are generalizable to many other local housing markets in the country. Here is my seller versus buyer face-off scoreboard again as a rough visual to help us keep track of the way the housing market is currently leaning. So, what's happening with prices at the local level? There aren't any strong trends. The message is definitely mixed, with price trends showing differences by home types. So, the score is unchanged. Days on the market is further down. This may be surprising, and even though, as I've mentioned previously, DOM is naturally biased down for the latest months initially, the decline is too sharp to be explained by this bias alone. So, what's going on? One possibility is that the supply of homes is still very, very tight. Look, the number of new listings this February is at the lowest level in years. And that's in part because a lot of homeowners locked in historically low mortgage rates and are now reluctant to sell because they'd be facing much higher rates to move into a new house. The first point goes to sellers. Percent of homes selling above list came almost all the way down to the normal range last month, but ticked up a little in February. Still, it's way down from the head-spinning pandemic highs, so this point goes to buyers. However, the percent of listings that had to lower their prices hit the multi-year low in February. It seems like after the spike in the second half of 2022, sellers realized they could no longer test the market the way they did during the pandemic. And now, listings are hitting the market with more realistic numbers, meaning there is less of a need to lower the original list price. Still, this number is low, and so sellers score. At 58% in February, cash transactions are as high as ever. And do you know that the average home price in Palm Beach County was $799,000? Yes, in this case, the average is more appropriate than the median. So 58% of all purchases were in cash. There was one purchase for $9 million in cash. There was one for $18.9 million in cash, and another for $22 million in cash this February. With so much cash chasing after the limited supply of homes, I think you'll agree with me that this point goes to the seller side of the scoreboard. That's all I had for this month's housing market briefing. See you next month. Ma salama.